Bitcoin and Ethereum are the two giants of the crypto world. Together, they represent more than half of the entire market's value. The battle for dominance shifts back and forth. One of the clearest signals comes from ETFs, exchange-traded funds allowing investors to gain exposure to crypto without holding coins directly. ETF inflows mean more money entering these funds, creating demand. Outflows signal investors pulling capital out. For Bitcoin, ETFs reinforce its status as the benchmark. Strong inflows point to institutions seeking stability, especially in uncertain macroeconomic environments. Ethereum ETFs attract investors seeking growth and yield. Staking rewards and its role in DeFi make ETH funds appealing for long-term strategies. ETF flows mark rotations in investor preferences. When Bitcoin gains inflows while Ethereum loses, it signals a shift towards safety. The reverse can also happen. Optimism can drive more capital into Ethereum, reflecting a search for higher returns and technological upside. Short-term flows are influenced by macroeconomic news, interest rates, inflation data, or jobs reports shape risk appetite in crypto. If central banks raise rates, risk assets usually face pressure. Investors might reduce positions in Ethereum ETFs but maintain or increase Bitcoin exposure. Conversely, a supportive outlook with lower rates can benefit Ethereum as investors seek assets with higher potential upside. ETF data matters for showing where institutional investors are putting their money. Their decisions can influence market sentiment significantly. Bitcoin is often viewed as digital gold. Its fixed supply of 21 million coins makes it a scarce asset, appealing as a hedge against inflation. Ethereum powers smart contracts, decentralized apps, and NFTs, driving new use cases and adoption. This difference explains why ETF flows into BTC and ETH often react differently to market conditions. Security versus opportunity. For long-term investors, neither trend is final. Bitcoin's and Ethereum's dominance cycles make ETF shifts more visible. Remember, ETF flows don't always predict prices. They're just a snapshot of current sentiment, not guarantees for the future. Still, tracking ETF inflows and outflows helps understand institutional behavior, giving valuable context to price movements. ETF data works best alongside other indicators, network activity, on-chain metrics, and macro signals for a fuller market picture. The Bitcoin versus Ethereum debate is ongoing. Both assets play different roles and attract different kinds of investors. For more insights into Bitcoin, Ethereum, ETFs, and the forces shaping crypto, stay tuned here on Blockchain Reaction. Like, follow, and keep learning.